Yo, what's up, guys? I'm gonna show off this model that I talked about in this video right here. For some reason I have this ad blocker thingy, but yeah, it was posted 3 days ago. So basically, I'm using 930 fair value gaps, and this thing called CSD. If you didn't know what that is, like, I heard Kish talk about it, but I'm pretty sure it's an ICT concept. But um, it's basically like when we like go above a down close candle. So there's a down close candle. We close above it and we create an order block. So we're looking for price to basically make an inverted fair value gap here. And this is like the first significant fair value gap after 9:30 market open. So there's this fair value gap. That was the first one. This is the most significant one. So I'm looking for price to go down here, come over here, come and make a down close candle right here, and then I want to make a new high, like price to make a high above that down close candle. Um, that's basically what it is in the strategy. So it could go down here and touch this, and then create that CSD. And when we do a CSD, we go 1 to 4. So it would be like this. And we would risk like $100, try and make $400 on this funded account. Um, Obviously, you can risk like $50 and still make some really good money. So we're looking for price to make an up close candle and go above this high right here, because it broke below the fair value gap. Now it broke above the fair value gap. Now a down close candle. I don't want to see it close below the fair value gap again. I want to see it getting respected and shoot up. Boom. Buy 1 to 4. Stop loss right here. So it looks like we're about to get a close. And if we get a close, then we can go to the first fair value gap, which still is not bad. And the trend is still very bullish. Breaker setup right here too. So trend is still with us. There's people probably in this position right here, like a 1 minute breaker setup. But we're seeing for this. Let's see. So we're getting some good movement. Looks like we're about to get a close above this line right here. Validating the setup. Down close candle right here. Make a new high. Yeah, so this market is showing me that it's like consolidating and not really wanting to get pushed up. It should have made a nice like up candle right here. Down candle going down and going back up if it was really bullish. So I could see a touch this candle or next candle right here. Hopefully a nice reaction and then a continuation up. And if not, I'm not looking for any type of bearishness. I'm not looking for any bearishness because look at this trend. Trend is your friend, man. So we're just going with the trend, looking to be bullish at 9:30 market open. And if it's not bullish at that time, I'm just gonna sit out because I'm not gonna trust this setup at 2 o'clock in the afternoon. You know, it's a morning setup. So, and it looks like it's like consolidating, and it's about to be 10 o'clock. So, still got like a good 30 more minutes in the power hour. So, look, so we're getting a touch right here in this small fair value gap, and just how I predicted this candle. But look at that respect of this fair value gap, guys. You shouldn't get anything cleaner than that. Like right here, so we made a big down close. This is a CSD right here. You see the up close candle down. If you're bearish, this is what you'll be looking for. You're gonna be a 1 to 4. You would already been stopped out break even. So look, 1 to 1. So right here, you would have gotten like $142. You would have lost basically $0. Let's say you enter again right here for this up move, you would be in profit right now, 155, and we would be holding for 1 to 4. But again, I'm not looking for any bearishness because of this daily bias, And you could watch all of this on the ICT, this video, ICT model, first fair value gap after market open. So, sorry, went to the chest. So why I'm looking for fair value gaps is because this is like showing me the impulse. This is the biggest fair value gap, and it took out liquidity right here. So this could either be a reason why we're gonna go down, or it could be the catapult. Like we could use this as like a retracement center, you know, maybe. Or let's see, you know what I'm saying? Like if we go and break a high right here, we can come back over here, go to OTE, you know, from this leg, let's say it's over here, and jump, you know. So these fair value gaps are important. This fair value gap was created, you know, on this run up, and this is the first fair value gap after we broke liquidity right here. So we found significance there because look, we closed above pretty bullishly, we closed above, and then we just kind of like catapulted up. So you know, once we got that CSD right here, you could have entered right there, stop over here, let's say. So we have a huge down close candle. We didn't go above this, but if we would have had to take that position and would have lost right there. But you get a huge down close candle, but which is okay, because this could always turn into a wick, or it could come right here. So we'll see. So we actually didn't get a body close, like a bearish candle closing below the fair value gap. So if we get a CSD up here, we're taking that, and we have to, let's say, so we do get a body close below. Okay, cool, that's fine with me. So we're waiting for that inverted and create limit order. Let's see, 100. So I should use 10 units. Yep, okay, that makes sense. All right, guys. So yeah, if we just get some like super bearishness, unless we get like, we go down and we have like 3 candles coming up, then I'll use this as like a propeller to continue going up. But if not, I could see us having a down day. Why not? You know. But who knows? I'm looking just to play the setup, and if the setup doesn't present itself, then who cares? This fair value gap doesn't come to any mind. Just go draw it out, because this did get respected by the body closes. So let's see. Yeah, guys, so we're seeing like just huge downward pressure, but look at the respect of this fair value gap. But I showed you guys the plan, and you know, obviously not every day you're gonna have, you know, a day where it's actually executable. But let's see tomorrow, maybe we can continue this stream and see if we can get it set up tomorrow. Yeah, guys, so right now it looks like we're still in bullish territory. So if we get a down close candle coming in here, we can send it. That'll be preferred. And yep, if we can get one up here too, it'll still meet the model. So we'll have to take it, but prefer down here. But at the same time, still meets the model, so we'll take it. Can't have oh, that's my alert. Can't have the different views of the model. Just trade the model, how the model works. Even if it's not the best entry, trade the model. Model cannot produce amazing entries every single day. Alright guys, so our conditions are pretty simple for this. So we have a down close candle that touched the fair value gap. We want basically up close candle that makes a high above this, and we're gonna go in market order, and we could basically just estimate 10 pips basically, from wherever it's gonna land. If it's up here, we'll bring it down a couple by 8 maybe. We'll put our stop down here. So let's see. So it looks like we're about to get that market order. Going in, stop down here, 1 to 4. Once we get to 1 to 1, so look, I already know we're gonna have to bring it down to 8. So right here, once we get to 1 to 1, we will go break even. So here, going in, So around $100 is fine. So 1-to-1. Once we get a 1-to-1, we're break even. And if not, if it takes us out, we'll let the stop loss do the job. And here is where you could put an alert, just in case you have to go to the bathroom or something. So only once. So once it crosses, I'm gonna get an alert, and basically I'll go in my trading view and BE. And if not, then we get stopped out. So I'll let you guys know the results. Maybe we'll find out the results in a couple of seconds. Yeah, if we know we're gonna get stopped out, you could always exit your position right now. That's okay. Exiting the position right now is fine. But if you're okay with taking a loss, and you know, if it's not a lot of money for you, hopefully you're not trading with a lot of money that actually you mean something. You know what I'm saying? If I'm trading, I already know that this could lose because the win rate is 30%. So I know that this trade could lose right now. Could go and lose literally right now. Nah, I want to imagine it goes. Nah. Yeah. So, shouldn't be hopeful when you're in the red like this. You shouldn't even be hopeful. Like you should be hopeful that your trade is gonna go only up. Like you should only be hopeful when you're up here. The goal is we catch a run that's this big. So that's also a reason why I'm cool with just taking this loss, letting the win rate, figuring out the win rate, making sure that I'm following the rules, you know what I'm saying? And if I'm following the rules, we can execute. So it looks like we're still in like that little bracket of like an hour time zone. So we still have some volatility. Let's see. I hope you guys have been enjoying this content, and if you have, please subscribe and like it. Thank you. Yeah guys, so today the setup perfectly helped us from not losing money. So like we did lose one time, but like the setup knew that was like, oh, you know, it shows you when it's bullish, you know what I'm saying? Like this was a really good try to continue the bullishness, and sometimes it's just not going to be like that, you know. You're going to lose one time, that's it. But it works out because when you win, you make a 1-to-4, and when you lose like 2 times, let's say every day, but you make a 1-to-4 when you win. You win 30% of the time. You can have days where you're winning three in a row, you know. You can also lose like maybe 5-6 in a row, but you're winning 3 in a row. You know, it evens out for sure. I hope you guys enjoyed this video. Check out this YouTube video if you guys want the full breakdown of the model. But look at that respect to this fair value gap though, guys. Look at that. Respected. So enough said. See you guys. Thank you for watching.